Hi there, and welcome back to the Metaverse Stock Exchange. It's February 1st, and it's a very important day because it is Fed Day, one of the most important days in economics because we get our interest rate decision, and with that, we get huge market movements. It affects the dollar, it affects crypto, and the entire economy. So, without too much talking, let's dive in deep. I am in my VR studio, flying by the Earth. We just passed Europe and Africa there, over the Americas right now with the moon shining bright in the center. So we're going to talk about what happened yesterday, what is happening today, and our stock of the day at the very end. So if we look at the charts and see what happened yesterday, I have the QQQ and the SPY pulled up here. And as we can see, they were up by 1.3%. Both of them. I don't have the Dow here, but the Dow was also up by 1%. So it was a very broad move higher. Most stocks were higher, and it was a pretty interesting and surprising rally. If you followed my video yesterday, you would know that I was expecting either a flat or down day. So I was not expecting an up day, let alone a 1.3% up day, because these days really rarely happen in front of such an important day as the Fed interest rate decision, because we don't know what's going to happen. And to see the market going so much higher on a day before the Fed decision, it's very, very strange, especially, and that's why I have Tesla pulled up here, because Tesla is part of that kind of more speculative stocks, and you can see Tesla finished the day at close to plus 4%. Why am I saying this? Because if we look at the broad economic data here, so we had the PMIs at 945, those were lower than expected. We have consumer confidence also lower than expected, and I did note that if consumer confidence is weak, we should see the market going down. Not only did not that happen, and then around 12 p.m., around 1 p.m., we also get the new registrations data from China. This is a Tesla specific number. And as we can see, for the this is the second week, of January. So January 9th to 15th, Tesla sold 12,000 cars, which is a huge boost for the stock, because this was when their price cuts got implemented and they said they were seeing huge demand. But then the next week was a holiday in China. It was their New Year's holiday, so we did not get data for 1 week. That was the week of the 16th to the 22nd. But instead, yesterday we got data for 2 weeks. So you can see China NEV registrations for 2 weeks, January 29th. And as you can see here, Tesla sold only 10,800 cars in 2 weeks compared to what they sold before, which was 12,000 cars in just 1 week. So it does show you that those price cuts, we will see. This is very interesting to kind of follow for the next couple of weeks. But definitely, if we see a pattern of Tesla cars now slowing down, at least this should have had let's say, a minimal impact on the stock, going at least flat. Maybe not down, but it wasn't definitely a really good number for Tesla. Instead, what we saw was Tesla stock just did dip on the news just a couple of minutes and then shot straight back and closed very close to 4% higher. And why am I pointing that out? I'm pointing that out because even with the broad economic data being lower and the stock specific numbers not being so good, all the stocks, including the most speculative stocks, were leading the market. And because the speculative stocks were leading the market, then the entire market kind of was going in, let's say, a bull mode. And that's why we had this rally in all stocks. So very strange, especially a day before the Fed decision. So I just wanted to point that out, that this is not usual, and that there is a underlying current of really investors going into speculative things and just investing on hopes that the Fed is going to slow down. And that brings us to what's happening today. So let's check what's happening on the economic front, and then I'll talk about the main event which is the Fed day. So if we look at what's happened, this is yesterday, so we already talked about that. Just move my screens really quick and go in there. Boom, there we go. So one key piece of data that we got this morning was Europe's CPI numbers. And to be fair, these were really, really good. We're interested in the month-over-month numbers because even the year-over-year numbers were going down. But more importantly, the month-over-month numbers for the regular CPI, that was down 4%. But what was more surprising was the core CPI going down by 0.8%. That is huge, 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 because that is the number. Core CPI is what the central banks look at, kind of is a more of a gauge, because in the CPI, the more volatile food and energy numbers kind of have those numbers mixed from time to time. So that's why they look at core, because that's a little bit more stable. And to see such a drop off is really good, at least for the European economy, for European interest rates, and hopefully the European Central Bank kind of slowing down. But that will be good for the US, because if the European Central Bank slows down, it will definitely signal the US central bank to slow down. But we have not seen these kinds of numbers in the US so far. But it was worth pointing that out because these are very, very big, huge numbers, at least for Europe. Okay, going down, we're going to have some mortgage data coming out in 7 minutes. I don't know if I'll be still filming at that point, but this is not a huge market moving event. What will be a huge market moving event is right down here. So we have the PMIs. That's definitely important. Construction spending, so ISM numbers, definitely a market mover of some sorts, but the key market mover in data that will kind of go into the Fed's decision is the ADP non-farm employment change. So they are looking for slack in the labor department. So unemployment rate, they would like to see that going higher so wages stop rising. At least that's what they want to happen. Whether you agree with that or disagree with that, that's a separate topic. We're getting the employment report on Friday, but in today's decision, they're going to be looking at this number, which is also a representative. It's not the same as the unemployment report, the official unemployment report. This comes from the ADP. You can go to the economic calendar and learn more about this indicator if you wish to do so. And I will probably make a separate video on it, but it does indicate the employment change, at least calculated by ADP, which is a private company. So we are expecting another 178,000 jobs, which is a slowdown from the 233,000 before. And if we see a slowdown, or maybe even a lower number than this, that will hopefully send a message to the Fed that they should be slowing down. But if we see this number higher, then definitely that will have a negative impact, and they will kind of continue to push on the throttle and raise interest rates more. If we go a little bit more down, so we have gasoline data, oil data, not a market moving event, and then at 2:30, that will be the Fed interest rates decision. So at 2 o'clock, we get the Fed interest rate decision, and then at 2:30, we get the press conference. Both super, super huge market movers. And this is what is going to shape up today's events. It is the most important thing. All this other data or earnings or everything, yes, but definitely this is what is going to move the markets. So right now we have the Fed interest rates at 4.5%, and we are expecting a quarter rate hike for today. Why is that important? That's important because the Fed has signaled that they would like to continue with at least a couple of more interest rate decisions. So, and why is that important? That's important because if we go on CNBC here and look at the US 2-year Treasury note, what you're going to see is this yield at 4.2%. So you might ask yourself, how is the government borrowing money at 4.2% with the Fed interest rate, pretty much the base interest rate, which should be the lowest interest rate, is at 4.5%, and it's going 4.75 at least. We're pretty much sure that that's going to happen at a minimum. So that's where we need to get in here And this is market expectations of where the Fed interest rates is going. Again, this is not from the Fed, this is from Bank of America, and this is according to them or their surveys where they believe the interest rates will be going. And as you can see here, so we're going to look at the median. We're expecting somewhere around 480 basis points, means 4.8. So 4.81, right? And then if we go a little bit further out, 4.86. So pretty much that's the top. They do not see interest rates going over 5%. Again, that's the median. The range does go over 5%, as you can see, 507 basis points, but that's the very top of the range right there. So why am I pointing this out? I'm pointing this out to understand that this rally that's happening in stocks right now is fueled based on this belief right here that the Fed will not only not raise more, so pretty much we're expecting the 4.75 to be the peak, or at least one more and then stop. And not only that, if you look at further out in 23, let me go getting closer, you see that the median there is 435 basis points. So we are expecting, at least the market expectations, is that the Fed is going to lower interest rates multiple times or by multiple 25 basis point hikes. So this is pretty much from 480 going to 430. That means a 450 basis point rate rate cut, sorry. And that's why I believe that the market's going so green. Truly, my opinion is that this is such a Goldilocks scenario that I do not think this will happen. Why do I not think this will happen? Because I have listened to every single Fed meeting so far. And is the criticism valid that they were late? Yes, they were absolutely late. Are they doing too much right now? You can make an argument that they're doing too much now, but they have been very consistent in their messaging. And their messaging is, we are going the path, we're going to raise interest rates, we're going to crush inflation. And this EU data is very interesting because the US data, yes, the headline inflation is going down, but the core inflation is still sticking at around 3 to 4% annualized rate. We're going to get a number in a couple of weeks of see the latest number, but point is we're still having 0.3 to 0.4% percentage moves in core CPI month over month. That's what annualized means. So if you have 0.3, let me go. So if you have 1 month of 0.3%, then another month of 0.4. So how to get, 0.4, right? So if this is the monthly, and let's say you get 0.4 and 0.4, the annualized rate is what you do is you multiply that by 12, and that's a 4.8% annualized interest rate. And as I said right now, core is at around 0.3, 0.4, getting in that range in the past couple of months. So we're looking at around 3 to 4% annualized rate, which is still above the 2% target that the Fed has. So I think that they're going to push harder. Tonight is going to be a very sobering moment, at least that is my belief, that the Fed chair is going to come out, especially in the press conference, be super hawkish and say that not only are they continue to either raise rates or keep these rates at these points, because all of this good news, so stocks going higher, pretty much the treasury yield at 4.2%, that is a loosening of financial markets and also of financial conditions. And that's something that the Fed does not like. They would like financial conditions to be stricter, tighter, for money to be for companies and the economy to hold money back so inflation will be held back. That's their only tool they have to fight inflation. But if you see stocks ripping like this, like 4% moves in a day, and not just Tesla, many companies yesterday had 2, 3, 4% moves, especially in the more speculative area. But even big companies like Apple and Amazon had a 1-2% move. Also, the Treasury yield at 4.2%. That is not signaling financial conditions tightening. So very, very important. I do believe that we are going to have a sobering moment tonight, and that the markets will turn either tonight or in the next couple of days when they realize that the Fed is going to be here and they're not joking around. That's my view. I'm going to make a video on the Fed probably either tonight or tomorrow, and we're going to see what happens. But I will definitely kind of caution you, if you're in the financial markets and you're thinking, should I play with the markets and kind of get in before the Fed, I would highly caution that that is a very, very risky move. Again, this is not financial advice. It is just education. You can do whatever you like, but it is very, very risky. And I believe that the market is so kind of to the upside. There's so much bullishness that we're going to get a wake up moment tonight, and the Fed chair is going to be pretty strict. And I think we can see stocks going lower either tonight or in the next couple of days. With that being said, we do have our stock of the day, which is Meta. I have it right here. And just to point out before talking about the stock of the day today, stock of the day yesterday, Snap. I did mention how this stock plummeted every time it reported earnings throughout last year. And boy, oh boy, they are on a hot streak. They definitely delivered. So we have Snap up top, and we have them down by 15, close to 16%. So the same exact reactions that we had for pretty much the entire 2022, same thing happened yesterday. They reported stock just immediately plummeted, even though they on their earnings expectations. So they got a profit out of it, but their outlook was so horrible. And to be fair, it wasn't even that horrible. Like, they still beat on their earnings, but just that was the reaction. And I think because options volatility and because investors were positioned like this, that's why I talked about it. Every time they report earnings, the stock plummets. And that's because investors are positioned like that, especially through the options market. And I think that's why we saw such a big move in Snap, which brings us to the stock of the day today, which is Meta. Let me just kind of write it here. Stock of the day will be Meta. And if we look at what's happening with Meta in the after hours, we do see down by 1.3% right now. It was down more than 2%, 2.5% when Snap reported, just because all the revenue at Snap is advertising, and pretty much most of the revenue at Meta is also advertising. So it is correlated, and investors were like, hey, if Snap's having a bad time, then Meta is gonna be having a bad time. With that being said, let's go to the chart. I need my mouse for that really quickly. Okay, we have it there. Let's go to the chart. There we go. So this is Meta's chart for the previous month. So if you look at from July, it was trading over $200, and then it has been in a constant decline. And keep in mind, as I said, with the Snap, when you see the E, that's the earnings. You see when they reported earnings here, a huge slump. Here as well, when they reported earnings, huge slump. This was so painful. I was in the stock at that moment. I still am, to be fair. And it went from 130 all the way down to $90 in just immediately, and then in the next couple of days. It was so painful. It was a 30-40% decline. It was brutal. Here as well, this is where I started getting into it in the 240 ranges, 230, then all the way going down. But as you can see, it has been in a constant decline. It was in the 300s at the very, very tops, and it kind of bottomed in the 90s. And throughout January, very similar like Snap, it has been on an uptick. It went from the 90s. Now we're looking at the 145s. We did crack 150 for the previous couple of days. So we are set up good. There is huge kind of big sentiment here. The earnings expectations, I'll put them up on the screen in post. I don't have them open right now, but they're around $2, which is super, super low for the fourth quarter. As I said yesterday, the fourth quarter is a giant for advertising. Last year, they made probably a little bit even three something dollars. So expectations right now are the pretty much half of what they were last year. And I do believe that they are going to beat, because even Snapchat beat on their earnings. So Meta hopefully is going to beat on their earnings as well. It is the outlook that will determine where the stock goes. So it will be very volatile. Keep in mind, we have the Fed decision at 2:30, 2 o'clock and 2:30 press conference, and then this comes out after hours at after 4 p.m. So we'll the Fed impact on the stock is, and then the earnings impact. But huge mover. If you want to play it with through options or through buying or selling, that's up to you. But Meta is definitely our stock of the day. Thank you so much for watching, and see you in the next one.